Hey everybody, welcome back to the channel. Palantir is at $19.52, up 9.5% on the day, and it's a pretty crazy morning open for Palantir. Right now it's about 11:30 a.m. as the time I'm recording this. Palantir was at $19.09 in the pre-markets. I actually went to the gym this morning. I got a new gym membership, paying $30 a month. My Palantir paper gains are allowing me to justify, hey, maybe I can pay $30 a month. And so if Q2 shits the bed, I'm going to be back jogging on the sidewalk. But I went to the gym around 5 a.m. and I looked at my phone and I was like, wow, Palantir's at 1909. Like, this just made no sense. It was insane. And so it came back down to the 1880s range. And as soon as the market opened, we bursted through that $19 level, went from 1918 to 1935 to 1970, eventually getting to 1999. Now on Webull, it shows $20 right here. I did not see $20, at least not on Robinhood where I was looking at, but I guess some people saw $20 and it might have hit 20. But I saw 1999 and it was kind of teasing us, and then it came back down to the $1950 range. So we're up 9% on the day. This is pretty interesting because on Friday, the stock after hours was up another 3%. So we ended at $18.41 after being up 10%. So it was almost like 13% at the end of the day. And on Friday, what happened? Well, Dan Ives, one of the largest and most influential technology analysts in the world, said that he believes Palantir deserves to be at $25 a share. He went on CNBC again today. I want to react to a little bit of him talking. It's about a minute where he's talking a little bit more about Palantir, get some more of what he has to say and his thoughts. And then I want to discuss why I think Palantir is running, what this run means going up until earnings, and kind of the impact that Dan Ives has had, because, you know, we're up 20% in 2 or 3 days. And I think primarily it's not because of the macro, although the macro is going well. I think it's because of Mr.
And I think when it comes to AI, we are in a fourth industrial revolution. I think this is an AI gold rush that's starting out, not just big cat tech. You look at names like Palantir, the Messi of AI, and some others. So in my opinion, this is just get out the popcorn for big tech.
You know, you're front running me now. I did want to ask you about Palantir. You call Palantir the Messi of AI, obviously referencing the international soccer star. What are you expecting from this report? What can they say that we haven't already heard? They've already told us they're the leader in AI. We know they're working with the government. We know they're gaining commercial customers. What else can they tell us that we haven't already seen?
It's really about showing not just on the government side, but commercial success. And I think that's really what I think is the golden jewel for them, is that parlaying the success in the 202 area code to AI now more on the enterprise, because that's really where the gold rush is. As a pure play, they're the best pure play AI name out there, which is why they are the Messi of AI. And I think this fourth industrial revolution, they are going to be a major player along with big tech.
I want to put you on the spot. We're showing the Palantir.
Okay, so those were his thoughts. The next question he goes to ask is about some of the tech companies that Dan Ives may not be as bullish on. And Dan Ives actually said Amazon might have a little bit of a hard time through the rest of the year. So a couple things I want to talk about here in terms of his thoughts. By now, you've probably seen the report. If you haven't seen the $25 report, I'm looking to do a more in-depth video on it a little bit later in the week. But if you want the full report, DM me on Twitter at @AmidIsInvesting, and I will send you the full report. And you'll be able to see exactly what Dan Ives has to say. It's a 15-page report, pretty extensive valuation model, talks about their moat, probably the best qualitative understanding that I've seen from any analyst on what Palantir is the company. Kind of sounds like I wrote the report, or any of us retail investors wrote the report, right? Like, it's kind of in our words, which is really interesting, because it's like, maybe we understand the company and now the analysts are finally starting to understand the company because we're synergistically talking about the company in the same way. And so one of the best reports I've seen in terms of a qualitative explanation on the moat. In terms of the valuation model, they're using 10x 2027 earnings, which might not be the best way to value the company right now to get to that $25 price target. But I actually think their whole point is like Palantir is going to grow, so we don't care that much about how we're valuing it. They even included 16% year-over-year growth, which is underneath CARP's guidance of 18% year-over-year, not government growth, but overall growth for the company. And so they're assuming not that much great growth this year, but better growth over the next couple of years. And even in those years, they're being conservative to get to this $25 price target. So we'll see how the valuation changes over time and if Palantir is able to live up those numbers. But I think their core argument is that there is a massive opportunity here. $25 is reasonable if Palantir can grow into that. If it can't grow into that, then obviously $25 will not be sustainable. Now, a couple things I want to say from what Dan Ives just said. He believes that there is this AI gold rush happening. And I've been trying to analyze this for the past 6 months. I mean, I remember the first time Dan Ives mentioned Palantir on CNBC. This was March, maybe. This is when stocks were really starting to get some momentum. ChatGPT was going mainstream. And I was listening to Dan Ives and I was trying to get his understanding. He was name dropping Palantir. He wasn't actually like officially making a recommendation around Palantir, didn't release a report, but he was name dropping them. And it was so interesting to me because I'm like, you know, you're talking about Microsoft, you're talking about Google. Obviously, I've been very bullish Palantir, and like to see an analyst like that name drop them, even in small little discussions on CNBC in an unofficial capacity, it was very interesting. It only makes sense that 6 months later, he's really thought about it deeply and has called them an unknown gem within the AI gold rush. Now, why is he saying that? I think at a top line level, he's looking at the Magnificent Seven. NVIDIA, Tesla, Amazon, Meta, Google, Microsoft, all these guys have done really well for the year. I mean, some of them are up triple digits. I think Tesla, Meta, and NVIDIA are up more than 100% year to date. And then the other guys are up 30, 40% year to date, which is pretty amazing. And so I think Dan Ives is looking at those guys like, we are really bullish on those guys. We think this is 1995. We think the next tech bull run is starting. We don't think there's that much crazy downside for these companies because we're entering into a new era. And he's trying to give some of his clients the ability to find exposure to AI without having to pay some of the premiums that they're having to pay for the big tech companies. And that's when Palantir comes to mind. Now, here's the question that I asked myself over the weekend as I was thinking about how Dan Ives kind of came to this conclusion. What other company is out there? Like if I'm an analyst, right, and I have institutional clients saying, hey, we have hundreds of millions of dollars. We want AI exposure. We don't want to miss this gold rush that you're talking about. Like, you don't have to sell me on the gold rush. I believe there's a gold rush. I see everything that's going on. I see how the private markets are funding it. I see what's happening with venture capital and startups. I see the effect of AI in my day-to-day life as I'm using AI to accentuate all the tasks that I do. As an investor, now I want portfolio allocation. And your job, the reason I'm paying your research firm, is to give me the best picks. And so I think Dan is kind of looking around everywhere, and he's like, NVIDIA's a little like all the Magnificent Seven are pretty expensive, even though they're amazing AI plays. And so to him, which he's done very well at because he recommended those to his clients a couple months ago, now he's looking for the next best thing, right? In the stock market, you have to find the next thing. And I think that in and of itself is a catalyst for the stock price being at $19 right now. And going back to the point of this video that the stock is past 19, and by the time I upload it, maybe it's below 19, whatever it is. But right now I'm looking at $19.56. And I've been asking myself this morning, it's up 9%. Is that retail or is that institutional? I'm 50-50 on that. It could be a ton of retail FOMO because Dan has a huge retail following. And this Palantir report got a lot of buzz. I mean, I sent out the report to at least 300-400 people. So there's a lot of people that wanted to see what Dan Ives was talking about. On top of that, a 10% gain in a day is not that easy for a company with 2 billion shares outstanding at a $40 billion market cap. I mean, like, you could argue there are some institutions that are getting more excited, and now that they've gotten the legitimization by a Wall Street guy like Dan Ives, that they want to take a closer look and might be wanting to pull the trigger before going into earnings. I think that Dan is looking around as like, look, there's not that many pure play, which is the term he uses, AI companies that exist. There's just not that many. I mean, like, there's C3 AI, which he's bullish on as well. There's, I guess you could say, Snowflake, but that is not a pure play AI to him. And from other people that I've talked to, Snowflake's not really the AI play. There's Datadog, there's Databricks. Databricks is in the private market. But you look at the sort of pure AI plays, what are they? Is it Roblox? Is it Zoom, which is Kathy's thesis, that AI is going to propel them to a $1,500 share price by 2026? You can't say any of the Magnificent Seven. So if you're thinking Tesla and NVIDIA, you can't say that because imagine you're in the position of Dan. His clients want allocation outside of those. If you're looking around and you're Dan Ives, you've got to be coming to a conclusion that, there's not a pure play AI company out there that's probably better than Palantir. Match that with the due diligence he's done, speaking to the CIOs, the chief information officers that report to the chief data officers that report to the CEOs, saying to him, the first person we call when we're even interested in implementing enterprise AI platforms within our business is Palantir. And he goes further to say, these CIOs have told me there's no other reference point other than Palantir. It's like, it's really interesting. Now at $19, do I think it's overvalued at $40 billion given the growth rate? 100%. And I would heavily recommend being cautious buying. Yes, could it spike in earnings because earnings are great? 100%. Could it also decline because earnings are not living up to that $40 billion valuation? Yes. And so I would be cautious here, but the one thing that's interesting to understand about tech stocks is that they always are overvalued at some point because there's a larger narrative and there's the hope that the company will grow into that narrative. And that's exactly what's happened with Tesla and NVIDIA. Is Palantir one of those companies that can grow into its valuation? Time will tell. But I think Dan has done kind of the cost benefit analysis and he's saying, seems like there's a shot they can grow into the valuation. $25 seems reasonable. And if they do grow into the valuation, which by 25 they would be at a 62.5 something $billion company, so it would be a company that would be worth half of $100 billion. They would have to have some level of growth to be able to justify that. And I think that's what Dan is seeing, is that there's not that many competitors in the market, which justifies the argument for why they have a monopoly on enterprise AI, that they're going to be able to grow because they have that monopoly, because there's no other reference points. CIOs are telling them this is the company that we call to even get some type of data. And you're looking at all these factors, you're kind of putting everything together, and it's like, all right, the CIOs are calling these guys, there's no other reference point. Yeah, it might be a little bit overvalued at 25 if the growth is not there, but all these tech companies are overvalued and they theoretically should grow if there's not that many other reference points, if there's not that many other competitors. And on top of that, Palantir in 2022 was the largest company to gain revenue by selling AI. They sold $1.3 billion worth of SaaS products to get AI. It was one of those reports that came out. Most OGs will know what I'm talking about. Microsoft came in second. So before AI was even AI in 2022, the artificial intelligence reports that were coming out was saying that Palantir is number one in the world at selling AI-based software. So they've been working on this for so long. Shyam Sankar, the CTO, just did an interview saying that AIP and all these LLMs are useless unless you have an ontology, which is what they've been working on for 20 years. If I'm Dan Ives, I'm putting all these pieces together and I'm like, this is a pure play AI company. And if I want institutional exposure, I don't know where I'm getting it outside of Palantir if I don't want to go with the Magnificent Seven. And if that's the case, one could argue that the reason the stock is at 1950 right now is potentially institutions understand that that's where Dan Ives is going and that's his thesis, and as a result have decided to buy into the stock. Or it might be retail FOMO, but it also could be institutions saying this is the time to kind of get into the company and see where it goes from there. So it's an exciting day. Congratulations to shareholders. I am not selling any of my Palantir. I am happily up for after 2 years of being very red on Palantir. I'm up, and so I'm looking at my Palantir and I'm just letting it ride out and see where the story goes. And I'm excited to kind of see where the story goes. We have August 7th earnings. It's going to be a very, very big day. Either they're going to prove the numbers or they're not going to prove the numbers, and so we'll see. I don't think it's the end all be all for the company, but I do think it will be pivotal to kind of see at least where the stock goes, and eventually, hopefully, there's enough growth there to justify that future quarters will be good as well. So yeah, those are my thoughts. Let me know how you're feeling. Palantir $19. Are you selling? And if you are selling, I don't blame you for taking your profits at all. The one thing I will say is that with these tech companies, sometimes they are generational. And maybe it goes back to 11 and you lose out on all the gains you had at 19. It's a question of, do you believe in the thesis? Are you convicted? And this is the one stock in the entire stock market I have zero problem sleeping at night because I don't plan to sell till 2030. I want this to be that thing that is there for a very, very long time. And for me to look back and be like, I chose to hold for 10 years. And when I sell, I deserve to sell because I held it for a long time and I believed in the mission of the company. And so, yeah, that's it for me. Thank you guys so much for listening, watching. Let me know what your thoughts are on Palantir $19, and I'll see you in the next one.